As we look ahead to 2025 and beyond, Nvidia continues to dominate the conversation in the tech and AI spaces with its remarkable trajectory of innovation and growth. Known for its groundbreaking advancements in GPUs and AI technology, Nvidia has been a key driver of the artificial intelligence revolution for years, constantly delivering products and services that redefine the industry. From powering state-of-the-art AI models to supporting cutting-edge applications in autonomous vehicles, healthcare, gaming, and data centers, Nvidia's portfolio is a testament to its ability to stay ahead of the curve. Their continued innovation in hardware, software, and AI platforms has positioned the company as a leader in addressing the ever-growing global demand for high-performance computing. With the rapid expansion of AI applications in nearly every sector, Nvidia is expected to maintain strong momentum in the years to come. Whether it's through the development of AI supercomputers or its contributions to deep learning and machine learning platforms, Nvidia is not just shaping the future of AI, it's creating it. For investors, innovators, and tech enthusiasts, the company's anticipated performance in 2025 and beyond is something to watch closely. Don't miss out on more insights into Nvidia and the world of AI. Subscribe to my channel today, hit that like button, and share this video with your friends and followers. Let's keep the conversation going by posting your thoughts in the comments below.
So why now? Why lifting the price target now? This awkward week between Christmas and New Year's, and you said, I have a call to make.
Yeah, because the bears, they're in hibernation mode because they can't find AI in the spreadsheets. And look, we're doing the work. What we see across the Asia supply chain, I mean, we're seeing strength not just into December, what I believe is going to be ultimately a record year.
CFRA Research Senior Equity Analyst Angelo Zeno joins us now with more in NVIDIA's quarter. And Angelo, it's great to see you. Listen, so NVIDIA reports, unsurprisingly, we're bouncing all around here in the after hours. But give us your immediate reaction, response to the print, Angelo.
Yeah, I mean, thanks for having me. So as far as the quarter was concerned, I mean, looked great. I mean, I think we were looking at 33 billion going into the print. So, I think the company guided, a couple of months ago at 32.5 billion. So, the numbers were incrementally going up kind of into the print here. And then they kind of posted a number that was, about 2 billion or so above what the expectations was. Clearly the guidance, I would say, is it was above what we expected. We were looking for 37 billion, but you've kind of got this game now where, you kind of have to beat the street by at least 1.5 billion to 2 billion. You didn't get that as far as the guidance is concerned. I personally would not be worried about that. What we've told investors out there is we expected Nvidia to kind of be a little bit more on the conservative side of things as far as the guidance was concerned for the January quarter, just because this Blackwell launch is kind of the shift towards this platform-based offering, and it's a very complex chip to make, and I think you have to kind of err on the side of caution here if you are kind of that management team, and if you over-deliver in come February. So I think this is the right move in terms of the guidance. I don't think you should read too much into it. I think all in all, this is these are pretty good, strong results.
And Angelo, the CFO commentary came out as well, and they say in there both Hopper and Blackwell systems have certain supply constraints that we know, and demand for Blackwell expected to exceed supply for several quarters in fiscal 2026. So does that sort of match what the market has been expecting? How do it sounds like you think that NVIDIA's sort of managed expectations pretty well.
Yeah, I mean, listen, we had actually written, I think, in our preview on Monday that we expected Blackwell delays to persist through the end of calendar 2025. So that kind of goes in line with, I think, the commentary that Jensen had made. He had made, comments just several weeks ago about kind of the insane demand that they're seeing for Blackwell. So we know this. We know the demand is strong. We know the demand is there. We know the revenue is going to be there. So again, it's one of those things as far as the guidance for this quarter is concerned, probably has more to do with some of the supply constraints and them kind of being a little bit cautious on the launch side of things. But yeah, I mean, as we kind of start seeing this ramp in the April and July quarters, and we believe a nice step up in terms of the revenue trajectory there, given that this is again kind of this platform-based offering out there, these rack solutions, then you're going to see kind of a significant improvement in fundamentals. But yeah, the supply constraints will persist. It'll probably hinder them from kind of selling what they want to sell, let's say over the next 6 to 9 months. But still, I think it also provides some very good visibility out there for investors looking out over the next 12 plus months.
Advocated is this theory on the idea that there can be some sort of expansion of the H-1B visas, that there can be an ongoing increase in employees and top talent to the United States.
For the first time in 30 years, the U.S. is ahead of China. I mean, in my perspective, from when it comes to tech, but to fuel that in terms of AI revolution, it's talent. And I think what we've seen, we've definitely seen a lack, I would say supply, demand. These companies more and more need to continue to fuel this with talent. So when you look what we're seeing with H-1B and ultimately as that all plays out, it will be something very, very important that plays out in Silicon Valley and across the tech world in 2025.
Elon Musk has been at the forefront of this debate, this argument over the holiday period. Let's talk about Tesla. Tesla an outlier in a pretty dreadful auto market, particularly for the European players. I think it was Stan Druckenmiller that once said, you'd be surprised by how few people understand what makes a stock go up or down.
Sure.
What makes Tesla go up or down? Because it sure as hell doesn't seem to be car sales. It seems to be something much bigger than...
And we're going to have deliveries probably in the next few hours, right, in terms of Q4. Look, I think this is an autonomous AI story for the next few years. And it goes back to the bet for the ages that Musk made on Trump I think is going to really play out as the autonomous future. That's what you're betting on in Tesla. You don't see that in numbers today. But I think ultimately, that's worth $1 trillion alone in terms of the AI autonomous story. But next few hours, this week, we'll be talking about deliveries. And it comes down to China deliveries, which were really a disaster at points in the last, call it 12 to 18 months, have now started to rebound for Tesla. And that's going to be very important.
What gives you the confidence that that will continue? Because there are some similar questions happening in the luxury space with companies like LVMH. Is China actually bottoming out for the consumer side of things? What gives you that confidence for 25?
It's what we see in terms of demand, in terms of what we see in terms of the overall China market for EVs. I think Tesla, I think a lot of those price cuts in the rearview mirror, we're going to have white knuckle moments. But ultimately, I think China is something that could be up 20% when it comes to delivery for Tesla. And that's why I think right now it's one where I think where the bears have sort of misunderstood Tesla, it's 10 to 15% of delivery story now. It's 85-90% AI autonomous in terms of the future for Musk and Tesla.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night.
Joining me now is Barbara Duran of BD8 Capital Partners, and Victoria Fernandez of Crossmark Global Investments. Guys, Happy New Year. Barb, for 2025, same playbook? I don't know. Look for pullbacks, more volatility?
Well, yeah, it's the question of the moment, isn't it? And I think what we've seen this year, we saw continual rotations as people tried to judge where we were in the cycle. And inevitably, even after profit taking in the Mag 7 or some of the big cap tech names, they always came back to that. I think you still have to be long a lot of these mega cap tech names simply because the earnings are there. This year, they're probably going to be an average 20%. Next year, 21%. So I think you've got to stay there. The big uncertainty right now, of course, is what happens with the new administration. How much will the tax cuts be? How much deregulation? And will that be offset by, high tariffs that could ignite, inflation a little bit more? Or even if there's mass deportations, what does that do to both growth, and need to fill jobs and wage inflation? So I think the market is going to wait to see that in terms of before they say, okay, we're going to rush into this economically sensitive and the cyclicals. We're going to wait and see. And I think but this week, there's been no catalyst. I think this is a thin trading week. I don't think this is predictive at all of what next year will be, but I think we're going to know a little more toward the end of the week. But I think it is pretty much the same playbook. We've just got to wait and see. After the inauguration on the 20th, I think Trump, like Biden, who had a lot of experience, is going to come out hard charging. He knows he's been there before, and I think he's got the game plan ready. So we're going to know pretty soon and judge likely impacts on some of the new policies.